Today in the markets, we had a solid move up today, based largely on the fact that there was some leaked news this morning about how Europe may have lent a helping hand out to Greece in that whole debacle. That's the first time that either side has really shown one of their cards, per se. As both sides continue to think that they have the leverage, and both sides continue to think that they're gonna wind up on top of this thing. And we still got another couple of weeks for this to play out. But I think both sides are really going to be hurting if no deal is reached between the two. A lot that can play out in that. So I'm going to be watching that very closely for the next couple of weeks. Wholesale inventories came out this morning. It was probably the worst number in a couple of years, with the ratio of inventory buildup to inventory sold at the highest ratio since the financial collapse. But the market doesn't care about wholesale inventories. All they care about is how much money the Fed's going to print and what the interest rate's going to be. They don't care about anything else. In terms of what happened throughout the day in the minute chart, started off at the higher open, drifted lower, and then all of a sudden just took off right up there. And we had the highest close today of the year. Didn't quite make a yearly high because two days ago we touched 207.24. Today we only hit 207.12. Very close, and still on lower than average volume per se right here. Only two other days within the year had lower volume, which was yesterday and January 26th right here. Anything can still happen. VIX really didn't do much today. Didn't move down in the sense that everybody thinks it's hunky-dory and all is well and Never Never Land. Not yet, at least. They're trying to get there. Probably going to take at least to the end of the month, because at the end of the month, the Europe-Greece conflict will most likely be settled, and the ECB is going to start printing euros, which is great news for the markets. In my opinion, barring a major calamity somewhere, the only thing that would start this market from tanking again to the point where we drop below our quote-unquote Yellen put down here would be if one of the big countries from the east, like a China, a Russia, and India, comes in and saves Greece instead of the Eurozone. If that happens, then there's going to be some massive volatility. But until then, I don't see much more than your average up, down, up, down. I mean, a lot of these stocks are companies buying back their shares, which they've been doing for years. And as long as interest rates stay at zero, they're going to continue to do so. As long as the yields on the Treasury continue to tank, they're going to continue to dole out this debt at near zero cost to them. But still, no real technical pattern coming out here, in the sense that we can't really draw any, shapes, zigzags. Not really any mono waves either, in the sense that yesterday was a pivot point, and then today was also another pivot point, which very rarely happens. And so tomorrow, it's up in the air. But in my opinion, if there's no news, then you're just going to continue to see another day similar to this. So let's look at our trade today on Netflix. The setup from yesterday was the resistance channel coming down right here. And what we said was today's open was going to be very close to crossing this resistance channel. And given the sideways day the previous day, we were going to say that the cross of the resistance channel is 442.5 or so. Then we were going to say our entry was a cross above 444 or cross below 441. And when we entered the cross above 444, I mean our stop was 441. If the cross was below 441, then our stop was going to be back above 444. And that was our setup, and here's what happened. We opened today above our cross. So I got filled right here with a 450 call for $3.10 right here. And then what happens after that, we're gonna start moving up, and then oops, going the wrong way. Touch our 442.5 line right here. But I'm not really worrying a whole lot at that point, because remember, here's what I'm looking at. On the daily chart of Netflix, we had this, we had this, we had this, we had this, right there. So tomorrow's open was right here. That's where we're at right now. And if we look over here on the minute chart, what I'm looking for or expecting is one of two things. Let's just say this is the line. Draw this a little more accurately. So something like this. If you assume that this line right here is the cross of the resistance channel. Right there. So this line right here that I just drew right there is going to correspond to this point right here on my daily chart right over there. And so it opens right here at market open. Expectation is to either do one of two things, to either shoot up and then kind of go around and go sideways for the rest of the day, or it's going to look like this. It's going to come down, hit it, and then go up, up, and away, like so. Therefore, if you see this right here, don't be greedy and wait for it to come down here, because if it comes down, if it decides to do plane number one and take off, you're going to miss out on a big profit because you are scared to waste 3 or 4% of the cost of the option, and you don't want to do that on a day like today. So get in nearly right when it opens. I picked a stock that didn't have a big bid-ask spread. Even at the very beginning, the bid-ask spread was only 8% of the cost of the option, which is usually a lot more. But on stocks like Netflix, like Amazon, like Apple, all these are things that it's okay to get in right at the very beginning. If you're going for a price line or something like that, you're going to throw away 20% of your value of your option right after you get in, or a stock if you're a stock trader. And it's almost like you get in and you're already down 20% without the stock even moving. So in this particular case, get in right away and just hold on and watch what happens. So back to the minute chart. Here's what's going on right here. And before we go any further, I'm looking at the price of the option right here. It's $2.86. And from there, it continues to stutter around. And then after that, it starts going our way. And then it comes back down a little bit. Don't get worried. It's Tuesday. We can wait. Comes down a little bit. Takes off again in our direction. And this for me is when I have the biggest trouble myself, because I don't know how far this thing's going to go. It could just go up right here and just stop. And I looked right now, at this point I'm up about 50 to 55% or so based on the cost of what I saw. And then it continues to go up a little bit, up and away. I see a little bit of a zigzag forming right here. and you can see it's already hit its target of 61.8 right here. So that's null and void for the moment. At this point I'm still waiting a little bit, waiting, still going up a little bit, kind of stuttering, and then all of a sudden takes off. And at this point right here, I see that I've made double my money right here. I see the calls are, the ask is 620. So as I'm putting in the order, it decides to jump a little more, and right there is when I get out at 655. Right here. Now after I see that I'm out at 10:16, I got out. I think it may have been filled. Now I got filled at 10:17. I'm looking at the market right here, and at 10:17, we're right there. So we're kind of down and sideways, and we're still going up on Netflix quite a bit. And at this point, I probably should have waited, in the sense that, you know, it starts to go down a little bit, never crosses this primary resistance or primary support that I've drawn right here, but it does right there. Goes sideways a little bit, and then starts to go up even more. Even more. And then it peaks around here. It goes to the end of the day. The peak price, when I'm looking back on this, is around $9 right there. So left quite a bit on the table, but in the end, still made a double, which you know, you can't lose sleep over a double in 45 minutes. But in retrospect, you're looking at this, you see the thing's going up quite a bit, quite steeply here, and a lot of these do have the tendency that once a certain point is reached up here, is a lot of people may just start doing some panic selling and just go straight down. I've seen that quite a bit, particularly in Google. That happens a lot. And as I'm looking down here, oh, not there, right here, the price was about 580 or so. So I lost 75 cents if I would have waited from there to there, but it went up back again. And this move from 11 o'clock on was nearly entirely due to the markets. So we had an uptrend and a big up day in the markets, and therefore you went up a few more points. But if this thing didn't go with the markets, more than likely it would have just stayed sideways somewhere around here. In the end, that's what happened. So you look back, bought it for 310, sold it for 655, 111% profit. And one thing as I was making this, I realized that in my last video, or the video I posted yesterday, I said that I was a bit hesitant to trade this one because I wasn't really sure, and it looks like I had to take my fear and shove it where the sun don't shine, because this one turned out a lot better than I had ever dreamed. I honestly was about to pull the trigger right here, down here, because I wasn't very confident that this thing was going to move at all, but instead it moved quite a bit in our direction. I was waiting right here because I'm seeing this thing's trading around 580 to 590 around here, and I'm just saying to myself, just get to the double, just get to the double, just get to the double, which is not the smartest thing to do. That's your ego over your bank account. So if If you can make out with a 98% profit instead of 102, don't go home and beat yourself up. Perfectly alright. But before I move on to tomorrow's trade, I do want to take a quick peek at one of my trades that I placed a little while back. This was the one I made on Amazon way back when, and I said at the time that this thing was going to go down because I didn't think it was going to stop at this. I thought it was going to stop at this resistance right here, 368, and go down. And when it went the wrong way and went big up the next day, I said in the following day's video that if you go up this way, you were going to make 100% profit. And if you thought it was going to go this way, you were going to take a 40% loss. Well, we showed today that that's exactly what's going to happen. Instead of 100, you can just go ahead and put in 111 right there. So there you go. If you're wrong, you lose 40. If you're right, you win 111. Not bad. And that's why I'm sharing this with you guys, to show you the benefits of what can happen when you put in the effort and you learn and you make responsible trades based on technicals, not based on something you read in the news. Because a lot of times when you read something in the news and everybody wants to go one way, the market usually tends to go the other. Very similar to what happened at the very beginning of the day today. Right there, let's throw the whole thing back on, take off my drawing here. Because at the very beginning of the day, everybody thinks the market's just going to go straight up because there's good news out of Greece for the first time all month. And look what happens. We start going down. I see this time and time and again. When everybody thinks the market is going to go one way, whether it's a stock, an index, a commodity, a currency. I see this a ton in currencies, especially the euro US dollar, or the euro, or the dollar yen, or the dollar ruble. Same way. I see this all the time. When everybody's going one way, the market goes the other. And with that, let's move on to tomorrow's trade. Before we get into tomorrow's trade, I want to make a couple of honorable mentions, per se. This was Google before today, and this right here, this big long line right here, that's not a good drawing. This line right here was earnings, right here. And since then, we've kind of been in a consolidation of sorts. We had 3-point contact on the 23rd, the 30th, and the 6th for this line right here. We've had a support channel right there. And I mentioned in a previous video, I really only look at one indicator, and that's the DMI on a rare occasion. This is one of those occasions when I'm trying to figure out whether something is in a consolidation or not. And what I look at is this black line right here. The blue line is the selling pressure. The red line is the blue line is the buying pressure. The red line is red line is the selling pressure, and the black line is a pattern, or the strength of the pattern, per se. So if this line, as you can see back here, come on, there we go, line back in December, it was very, very, very strong because Google was in a strong bearish pattern. And when that line tends to go up, that means the pattern, whichever direction it is strong. And when it goes down, it means there's not really a defined pattern. And so since this particular day in mid-January, it's kind of hasn't really been in a pattern one way or the other. And when it starts to get small like that, I know that we're in a consolidation. And when you have a consolidation, you tend to have a breakout. So if you go back to the normal day, here was today, right there. It crossed above here, and if this one continues to go up, which I'm not sure it will because it stopped at 540 the last few times, in the sense that it never got above this line right there, or at least couldn't make an effort to go beyond that. It did close above it right here on the 23rd, but other than that, not really. So I don't have a ton of confidence in this, even though the pattern should say by this particular time that it should hit this 555 at least, an 80% chance that it'll hit 560. Not sure if that's going to happen, especially with the way the market's going around right now, so I'm not 100% confident in this one. But it's something to watch. Now, another honorable mention was Apple, and this is Apple today. It hit an all-time high, and it is the first company to achieve a $700 billion market cap, which is the price of the shares times the number of shares outstanding is over $700 billion, and that's including all the buybacks it's been doing for the last couple of years, which is really, really impressive. And if for some strange reason this thing were to make it all the way up to 170 up here, which is a long, long, long way to go, if you look and see where it's been and where it would have to go, if it were to make it up to this 170 level, Apple would be worth $1 trillion. Interesting tidbit, because you never hear that flown around. I mean, we've had absurd evaluations in a lot of new IPOs. We haven't had the late 90s run up of IPOs of overvalued companies trying to get in with no assets and negative cash flow, the sense that we had then. But we do have a few, like I've read a story about a grilled cheese truck that is now trading with a $108 million market cap. A grilled cheese company that has a grand total of 3 trucks, $1 million in net sales, and $900,000 in losses. So a company that is losing money over 3 or 4 grilled cheese trucks is worth $108 million on the market. If that doesn't say bubble, I don't know what does. But I digress. Here's why we have honorable mention for Apple. I saw this particular pattern earlier yesterday. Chose to go with Netflix. Either one would have worked out really, really well. But we've had this 50% retracement since February the 2nd, and our target is going to be this 122.85. But there's too much risk involved in going from where it closed today at 122.02. So here is the risk. So it would be our entry right here. Our stop is two levels below where it hit. So it hit the 78.66 extension. The stop would be at the 50 at 120.61. So let's call it that. And then our target would be 120.85. So you can see our reward to risk, our risk to reward is less than 1. Now it's not even 0.75, so it's not worth getting in that sense. However, if it were to cross the previous fib level right here, let me draw this. Give me 1 second. Do that a little better right here. So our target is about 122.75 of a target. Could go above it, but that's all we're expecting is 122.75, and our stop would be at this 50% extension down here because it hit the 78.6 today, and we'll call right there at 120.53. If this decides to somehow hit right there at 121.05 and come down enough, that is our green light to go bullish if it hits that target, because if it were to do that, then our entry would be right there, our stop is right there, and our target is up there. Much better reward to risk of 3.48 as opposed to 0.59. You know, that's way too stinking small. So that would be one of the contingents I see. Do I see that happening? It's hard to say, but I do want to throw that out there as something that I will be watching as well. But the trade of the day is actually going to be Netflix again. And we're going to go bullish on Netflix, but for entirely different reasons. As we can see right here, the 460 mark hasn't been a resistance in the past. So you can't really, even though it's a nice round number like a computer resistance, it really hasn't been there in the past. It may be there again, but it's certainly hard to say. So what I'm looking at right here is ever since the end of the bullish pattern, I'm going to call it right there, we've had a wave 1 or an A wave, a wave 2, a B wave, and a wave 3, a C wave. And this is what we call a flat pattern. And because this second wave is longer than both of these previous three the previous wave and the following wave, that indicates buying strength for me. And the next mono wave, or the wave after this, the completion of wave C, which is, I can't really click the line, this one right here, wave C, is the next mono wave is going to have to touch at least the top of the next one right there at 458.5. But it still has a lot of buying strength based on the technical pattern, if it works out the way that it should and has in the past for me. So like on the previous day, those waves out for you. On the previous day, we went up because it crossed the resistance channel right here, and today we're going up because of the pattern of these three sequential mono waves, which is 1, 2, 3, right there. And it's certainly possible to get some sort of retracement like so, and stop in the middle of the day where it comes down to this one of these levels right there. I should draw the other one right here. If somehow it were to retrace down here to one of these 450 levels, these 447 levels, this 445 level, something like that. It's certainly possible to do that, but also given the fact that this thing ended at least a couple of points off of its daily high, also gives me an indication that it's going to go up the following day. So that's going to be my trade for tomorrow, my definite trade for tomorrow. I'm also going to be watching Apple. I'm also going to be watching, here's another honorable mention, Amazon right here. Here's the move since earnings, and since then we crossed the support channel a few days ago right there. But ever since then, this thing has been consolidating quite a bit, in the sense that we're lucky to have 2% ranges, or in the sense of the price range of the day isn't more than 2% of the stock, which is quite unusual when you consider a move like this one, a move like this one, a move like this one, and a move like this one. When I pull up Amazon on the 5-minute chart, it's pretty clear to me that this thing's in some sort of a consolidation right there. And look for this thing to have a big move tomorrow. Hard to say which way, which is why I'm choosing Netflix instead of it. So when I'm finally formulating this Netflix trade, what I'm looking at is where do I put my stop, because there really isn't a technical stop that I can say, okay, if it crosses this line, boom, we're done. If this thing begins to retrace like so down here, I'm gonna go ahead and say that let's make the stop 5 points below tomorrow's open. Let's go ahead and do that. And depending on if this thing decides to open at or above the high of yesterday, don't worry about going in. There's not going to be much profit. I'm probably going to go pivot to Amazon, as well as watching Apple throughout the day. And of course, everything in this is dependent upon any news that comes out of Greece overnight. If there's a big, big move of some sort or some nasty catastrophe somewhere, then this could all go kaboot. But assuming none of that happens, my trade is going to be Netflix. My trade is going to be bullish. I'm watching Amazon as well, and I'm watching Apple as well. So those are my trades for tomorrow. 2 days up. We'll see if we can bring home the bacon. So with that, good luck.